Now at 4:30, consumers stepped up spending last month. A new report shows retail sales climbed, outpacing the gains set in October. Welcome back at 4:30, everyone. I'm Tamara Sakarzik. The boost in spending highlights the economic growth that we've been seeing. Several industries saw a boost in sales. The auto industry, their sales climbed 2.6%. That's likely because many people needed new cars after hurricanes down south. Online retail sales also jumped from the holiday season. Spending at grocery stores and restaurants, however, those fell. If we take you live to the stock's closing board right here, you can see the Dow dragged down this morning and ends 267 points down, marking its first 9-day losing streak since 1978. Traders apparently not impressed by this report. They're waiting for the Fed to meet tomorrow to see whether a rate cut is coming. We're also anxiously awaiting that meeting, of course, so here to talk about what we can expect, bank rate analyst Greg McBride. Greg, thanks for being here with us.
Great to be with you. Thanks for having me.
So, Greg, everyone wants to know, do you expect a cut tomorrow? And if so, how much are we looking at?
Yeah, do expect another rate cut. This one will be a 1/4 percentage point. This will be the third rate cut since September, and it brings the total reduction in interest rates since September to 1 full percentage point.
How much does today's retail spending report factor into decisions like whether there will be a rate cut?
Well, it doesn't really factor into whether or not there's going to be a rate cut this week. That has, been baked into the cake, and that's been kind of a known fact for a while. But what it does tell us is it's kind of singing from the same hymnal of the other economic data we've seen lately, which is that the economy has been remarkably strong and has continued to surprise to the upside from a growth perspective. So it's certainly consistent with that. And that's one of the reasons why I think in 2025, the Federal Reserve isn't going to be in such a hurry to cut interest rates, because the economy's been doing well and inflation remains stubbornly high.
Oh, so that's interesting. So with the economy doing strong and inflation being high, you think that next year we could see kind of a pause in these rate cuts?
I do. Inflation's not cooperating the past few months. The progress has really stalled out. Inflation has come down mightily. It had peaked at 9% in 2022. It's now a little bit below 3%, but it's been a little bit below 3% all year long. So, getting down to the 2% target, that we've been in a holding pattern. I think the Fed wants to see some consistent improvement on that before they feel comfortable cutting rates further in 2025.
Right. And we, of course, also have another big change coming. We have a new president taking office. Does the incoming Trump administration play a role in any rate cut decisions, or what can we expect?
Well, there is the prospect for policy changes that could impact the outlook for the economy and inflation. I mean, still a lot of question marks and not a whole lot of answers there. But I think that's one of the reasons why you're going to see the Fed, sit back, evaluate economic data, particularly on the inflation front, but also on the policy front, just to see if there's anything that could impact the economy or inflation in 2025 that they need to factor in when making those decisions.
Right. So like you said, a lot of question marks, a lot that we will have to watch in the weeks and the months to come. Greg, thanks for making the time today. We appreciate your insight on this.
Thank you.